Lyft is a stock where the fundamentals and the stock price are diverging, potentially providing investors a value investing opportunity. This is Intrendias. Let's check out Lyft stock. We can check out Lyft on Intrendias.com and see that the MIA algorithm is up 54% on this stock compared to the stock's own performance of only 7% in the past 2 years. Intrendias buy and sell signals have outperformed on Lyft stock. The most recent buy signal was on March 20th. At these prices, it may be a good entry point for Lyft. Lyft is a rideshare platform in direct competition with Uber rideshare segment of the business. I gathered comparable stocks like Uber, DoorDash, and Instacart to see how valued Lyft is compared to competitors. It's important to note that these companies are not completely identical. For example, Lyft does not provide food delivery services like Uber Eats, so keep this in mind. This comparison shows Lyft as potentially undervalued when compared against similar stocks. Lyft trades at an EBITDA of 28, which is lower than the basket average of 70. Lyft also trades at a discount on a price to free cash flow perspective at 39 compared to the industry average of 69 for the quarter and 7.1 compared to the industry average of 22 for the yearly. We can clearly see a divergence in the fundamentals and the stock price when comparing the annual free cash flow and the market cap. Lyft achieved positive free cash flow in 2024, but investors are now willing to pay less for Lyft on a free cash flow basis compared to when it was burning through cash. Lyft was once at negative 1.4 billion in free cash flow with a 15 billion market cap. Today, Lyft generated 766 million in free cash flow, but the market cap is only 5 billion, 3 times less than 4 years ago. An issue that stands out for Lyft is the high price to earnings ratio of 254 according to TradingView. This showcases overvaluation compared to the basket of stocks. However, Lyft recently became a positive net income company, and the stock price has only since then declined, leading to a bullish opportunity where the stock price has diverged from fundamentals. Instead of trailing EPS, which uses the historic earnings per share, let's look at forward EPS, which uses future expected EPS numbers. Lyft's valuation continues to trade at a discount when using forward EPS. Lyft trades at 13.8, while the basket average is 45. Net income is part of EPS, and just like price to free cash flow, we can see the divergence in stock price compared to the fundamentals. Investors back in 2020 were willing to pay 3x more for Lyft when the stock itself was losing 1.7 billion in net income compared to today. Lyft generated 22 million in net income, but the stock trades at only 5 billion market cap today. Before we get into Lyft's business operations, consider clicking subscribe if you enjoy stock analysis and coding content here on Intrendias. I appreciate your continued support of the channel. Let's get into the business operation performance. Gross bookings is up 17% year over year. So this is the 2023 and 2024 comparison. Gross bookings means the total dollar value of transactions invoiced to rideshare riders. The total number of rides also rose 17% to an all-time high of 828 million. This ride growth is not slowing down either. We can zoom into the quarterly, and Lyft went from 153 million to 218 million. Lyft also has a segment of customers called active riders who take at least one ride per quarter. These loyal customers have increased 10% year over year to 24.7 million. So even though Lyft is small compared to Uber on a market share standpoint, this has not stopped Uber from performing more rides. Even during a time of automation and robotaxi threats from Google's Waymo and Tesla, Lyft continues to execute more bookings and rides. Lyft's valuation continues to diverge from the fundamentals of this executing company. Their revenue growth continues and they became net income positive. And my favorite, they became free cash flow positive. Lyft trades at a discount from a forward EPS, EV to EBITDA, and price to free cash flow basis. This bullish setup may serve investors with an asymmetric investment to the upside if Lyft continues to execute. And I think here on Intrendias, Lyft will. So we discussed all the good things about Lyft. They traded at a discount, became free cash flow positive. Operationally, they continued to execute. But what about the negatives? What are the potential downsides of the company that may explain why they trade lower compared to the industry? First one may be their small footprint compared to Uber. Lyft operates in the United States and Canada, whereas Uber is in 70 different countries. This places Lyft at a disadvantage as increased competition can eat up their existing market share. Lyft's market share is small, but this could be viewed as a positive. This means Lyft has more spaces to grow into as they solidify their presence in the United States and Canada first. Another factor is AI. Investors fear autonomous vehicles like robotaxis taking away Lyft's business. When people hear robotaxis, people think of Tesla. But as of this video, there are no Tesla robotaxis on the road. Instead, it's Google's Waymo with rubber on the ground. Waymo did 4 million rides in 2024, and this number will go higher as Waymo enters new cities across the US. Lyft is attempting to stay in the game with their partnership with Anthropic for customer service AI solutions and potentially entering driverless rides as soon as summer 2025. I do not think ride sharing will be a one winner scenario, but rather a few competitors simultaneously in the space. Ultimately, I am personally bullish about Lyft. The company continues to execute in a harsh market, and the fundamentals of the company continue to get better while the stock has traded down. It will only be a matter of time when the price finally recognizes the fundamentals and trade higher, assuming Lyft continues its great operations. But of course, Intrendias is not financial advice, and everyone has their own financial journey. Let me know what you think about Lyft down in the comments below. I appreciate you watching this video and subscribing, and let me know what you think about other stocks like Lyft and Uber down in the comments. I will see you all in the next one.